All of these places had models. I mean, the major banks, the major investment banks, and they would meet weekly at a risk committee probably and go over their models, and all of the statistics would be printed in nice columns and everything. And they didn't have the faintest idea what risk they were involved. You really need, in the investment world, someone very solid, someone you trust, reasonable analytical skills, but you also need someone that actually can contemplate problems that haven't popped up yet, but which are starting to become possibilities in terms of new financial instruments or new behaviors in markets and that sort of thing. And that's a rare quality. I mean, that inability to envision something that doesn't show up in your past model, can be fatal. And Charlie and I spend a lot of time thinking about things that could hit us out of the blue that other people don't include in their thinking. And we may miss some opportunities because of that, but we feel it's essential when managing other people's money, or for that matter, managing our own money. So I would say that you might go back and read the 2006 annual report again, but those are the criteria we're looking for, and we have identified as being met by the four people we're thinking about. Charlie?
Yeah, you can see how risk averse Berkshire is. In the first place, we try and behave in a way so that no rational person is going to worry about our credit. And after we've done that, and done it for many years, we also behave in a way that if the world suddenly didn't like our credit, we wouldn't even notice it for months, because we have such liquidity and are so unlikely to be unable to be pressured by anybody. That double layering of protection against risk is like breathing around Berkshire. It's just part of the culture. And the alternative culture is just the opposite. You call a man the chief risk officer, but often he is functioning as a guy that makes you feel good while you do dumb things. So he's like the Delphic oracle that convinced the Persian king to attack somebody or other. I mean, he's just a dumb soothsayer. And how can a guy be dumb when he's got a PhD and he can do all this advanced math? Well, you can, but you can. It's perfect. Well, all you've got to do is crave system and computation so much that you torture reality into fitting some model, mathematical model, which really doesn't match, particularly under extreme conditions. And then because of this work that you're putting into everything and these computations about daily trading risk and so forth, you feel confident that you've clobbered the risk, but you haven't. You've just clobbered up your own head.
Yeah, we really want to run Berkshire. I'll even applaud that one. We really want to run Berkshire so that if the world isn't working tomorrow the way it's working today, and it's working in a way nobody expected, that we don't have a problem. We do not want to be dependent on anybody or anything else, and yet we want to keep doing things. So we think we found a way to do that. It may give up some of them. Well, it obviously gives up earning higher returns 99% of the time, and maybe 99.9% of the time. Obviously, we could have run Berkshire with more leverage over the years than we have, but we wouldn't have slept as well, and we wouldn't feel comfortable. We have a lot of people in this room that have almost all their net worth in Berkshire, including me, and we wouldn't feel comfortable running a business that way. Why do it? I mean, it just doesn't make any sense to us to be exposed to ruin and disgrace and embarrassment and for something that's not that meaningful. If we can earn a decent return on capital, what's an extra percentage point? It just isn't that important. So we will always try to behave in a way that A, is not dependent on anybody else evaluating the risk except for us. It cannot be farmed out. And you've seen what happened to some institutions where the management thought they were farming it out. And if that means a reasonable return instead of a slightly unreasonable return, we just accept it.
Hello, Mr. Buffett. Hello, Mr. Munger. My name is Burkhard Wittek, and I'm from Munich, Germany. I would like to get back to your point that as a professional investor, one should be able to act quickly and decisively. That means being able to know what the intrinsic value is and to act within a day or within an hour if the market offers an opportunity. My question is, how large is the universe of companies which you have in your head whose intrinsic value you know, where you would be able to act within a day or two if the market offered an attractive price to you? And secondly, how come you suddenly invest in Southern Korea or China?
Yeah, we can act. Our immediate decision is whether we can figure what's being offered out to us or not. I mean, there's a go, no-go signal, and Charlie and I are often thought to be rude when we think we're just being polite and not wasting the other person's time. So as they start mid-sentence in their first conversation with us, we just say, forget it. And Charlie's pretty good at that, and I'm picking it up. We know very, very, very early in the conversation whether somebody's talking about something that there's any chance is actionable by us. And we don't worry about the ones we miss. We want to make sure that we don't waste any time thinking about things that when we get all through thinking about them, we're not going to know enough to make the decision on. So we just rule those out. And that rules a lot of things out. Then if it gets through a couple of these filters and makes it into an area where it says this is something that we know enough about to make a decision on, we're ready to move right then. So we make decisions. We can make a decision in 5 minutes very easily. I mean, it just is not that complicated. Now, we know about a number of businesses and industries, and there's a lot of businesses and industries we don't know anything about. We know about a lot of things about certain kinds of bonds, and we know some. There's a variety of things we know about, and it's nice if we can expand that universe of knowledge. But the most important thing is that anything that gets through is in an area of knowledge. And the truth is, if we can't make a decision in 5 minutes, we can't make it in 5 months. We're not going to learn enough in the following 5 months to make up for the fact that we went in deficient in the first place. So it's just not a problem around Berkshire. If we get a call and somebody says either they've got a business for sale or that's what we're going to get on the calls. Or if I'm reading a paper or a magazine or an annual report or a 10K and I look at a price and there's a significant differential between price and value, we move right then. And Charlie and I don't need to talk to each other about it. I mean, we both think the same way and we have generally similar spheres of knowledge. Charlie?
The answer to your question is we can make a lot of decisions about a lot of things very fast and very easily, and we're unusual in that respect. And the reason we're able to do that is there's such an enormous other lot of things that we won't allow ourselves to think about at all. It's just that simple. I mean, I have a little phrase when people make pitches to me, and about halfway through the first sentence, I say, we don't do startups. They don't exist. Well, if you blot out startups, there's a whole layer of complexity that goes out of your life. And we've got other little blotter out systems. And using those, we finally find out that what remains is still a pretty large territory that we can handle. You think that's fair, Warren?
Yeah. And there are an awful lot of giveaways that people in the first sentence or two throw out that, we just know we aren't, it isn't going to work. And we waste I would say, we waste a lot of time, but we waste it on things we want to waste our time on. And we're very selective about that, and then we're good at it. We waste a lot of time. But we're not going to waste it on things we don't want to waste it on.